Hey folks, David Frost, mystrategicforecast.com, here for another episode of Common Sense Technical Analysis. You're looking at a daily chart of the SPY, and the market is in melt-up mode. So basically, on light volume, which we've had for quite some time, anytime the market has light volume, basically it floats up, and it's as simple as that. You don't have to read into it. It's easy to push the market around. The program traders have buy programs, and the institutions are easily pushing the market around, and the computers trade the market half the time, and they're basically manipulating the market up. And I mentioned to you a number of times 1923 as a top for the S&P. Now, I don't know if it'll be the ultimate top, but we're at 1920 today, and tomorrow is a Friday, probably light volume unless something crazy happens. It's the end of the month. Are we going to finish at 1920, 1923, 1925, maybe even 1930? Sure, it's possible. So we're in that zone where I thought we'd see some major resistance. And 1920 to 1923, it's pretty close enough for government work anyway. And so I'm going to say that over the last couple of days, I felt that we should be at some resistance for at least a pullback, not necessarily a major sell-off, but a pullback. And that pullback would occur if we did see it, whether it was next week or whether it was the week after. I still don't think we'll get much below 185. 185, 186, in this area here where we came down a few times already, a couple of times. I just don't see us getting much beneath that until the big turn that's going to occur later on. And we're still weeks away, so I don't want to get hung up on a date, but we're at least 4 to 6 weeks away from what I think is going to be some major volatility coming into the market, major opportunities, major market moves. When the volume picks up, which I anticipated doing, it's game on. Put your seatbelt on, strap it on, because there's going to be a lot of swing trades out there, a lot of market volatility, a lot of crazy stuff going on. So right now, we just have to pick our spots. We have to pick patterns. We have to pick the right stocks or the right exchange traded funds, and we have to play them with tight stops, and we have to play them methodically, and we have to do what we do, which is follow a system versus just willy-nilly picking a stock, throwing a dart, buy, sell. We don't do that. We do it systematically. So as far as this goes, there's no trade here. There's no reason to be long the market because it can turn down at any time. And there's no reason to be short because you're in a bullish uptrend. You're above the 200-day, the 50-day, the 20-day moving average. And if you slide over to a weekly basis, it's the same picture. Okay, you're above the 20, the 50, and the 200. This is a bullish chart. There's nothing that says this chart's coming down. We know it's going to come down at some point. It's just not coming down now, so there's no reason to try and pick a top. Picking a top is a fool's game. You know it, I know it, the fans at home know it, so we're not going to do it. So let's go over to the small cap index, the IWM, because it is a slightly different picture. Now, we might as well start with the weekly since I was already on it. And you'll look, we came right into the 20-period moving average, and we stalled. So will we push through tomorrow? I don't know. We pushed through over here by a little bit, and then we pulled back. So, we could still get up to this 115 area. But for now, my money is on not going higher than 115. So when we get close to 115, I think this will be a trade on the IWM. Remember, we want to pick weak sectors, weak stocks, weak markets. This is still weak. As long as we stay below here, this is a weak market. And this is sideways, bearish consolidation, movement. There's just no doubt about it. If we go over to the daily chart, we see much of the same picture. It's just a little choppier. But we came into this 50-period moving average, and we're making a little bit of a sideways, maybe bullish consolidation even. But where's the upside limited to? It's in this area. You're going to see a lot of resistance in this 115 area. You have this period here, and then you have these 3 days here, and that's gonna have a lot of resistance. And then you also have this area here, another ton of resistance. I don't think we get up this high. You have a high, a lower high, a lower high, a lower high, and whether we push up or now or not, we still are below these highs, which means it's a weaker market. So when the market does turn, this is going to come down with some vengeance. Let's move over and take a look at the gold market, and we'll slide into the GLD. And I've been telling you the GLD was in a bearish pattern, and it started to play out a couple of days ago, and I don't think it's done yet. First target was always going to be around 120, and we didn't get there yet, and we could still see down in 115 area in the next month or so. If you look at the weekly chart, it's much more pronounced. You see this down move sideways for a while, and now you have another down move. Now the market, a lot of times, not all the time, but a lot of times the market likes to be what I'll call symmetrical. And if the market's symmetrical in this case, from this down move, from this high here to the middle of this consolidation area is about 8 points. Okay, so from this down move, about 8 points would put us around 116. We're at 120. Is there another 4 points on the downside? Sure, could be, absolutely. Is it going to happen? I don't know. There's no way to tell exact price that it's going to reach in the next week or two. However, what we can do is wait for a pattern to set up and look for the long in gold, because there will be a long in gold. And whether the long in gold is in a month or 6 weeks or 8 weeks, it doesn't really matter as long as we pick the right market setup to take the long and put the odds in our favor versus, trying to pick a top, pick a bottom, buy gold because we're gold bugs, sell gold because we don't want it. You have to have good reason. And with market analysis, I have the reason. I'm giving you the reasons. We don't have a reason today. When we do have a reason, I'll tell you about it. So let's go and look at the interest rate market next. So we're going to look at the TNX, which, let's see, TNX. And this is the 10-year Treasury. And on a weekly basis, look what happens. We came into the 200 period moving average, and today on the TNX or the 10-year, we hit a low of 240. Okay? So I said between 230, maybe 230 to 235 is what I think my target's been. So that's here. So we have a little more downside, but not much. I don't think we go much lower than that. So we're getting extended. And this is, this daily chart pattern certainly looks like an extended move, right? Here's your symmetry again. Okay, so look, we just saw this in gold, and I said, I don't know if it's going to play out, but here's one playing out. Okay, so we had a high here, we sold off, we consolidated for a while, and now we sold off almost to the same amount. Okay, if we have one more down move down here, I think this is about the same level. I'm not measuring this with lines, and I'm not calculating it while I'm doing this video, but I'm telling you the eyeballs can see, and I can see that the market symmetry is starting to work. That's not the reason I think the low in gold in the 10-year is going to be in the interest rate. However, it supports my case. And if we look at the 30-year, which TYX is the symbol, I think that, I don't know for sure, but I think the low is in here. I thought it was in already, but I just think this is very extended also. And if you look at a weekly chart of the 30-year bond, it just, I don't see it coming much beneath this. And I just don't see it. This pivot top here, this breakout here, this is a fib level, so let's mark off the Fibonacci level. Okay, let's see where we are. Low to high. Okay, here we are, 38.2 retracement, 50% retracement here, tons and tons of resistance. A lot of reasons why I think the bond market, which is the opposite of interest rates, is finished going up for now, and I think the interest rate market is finished going down for now, and that's why I am long, okay, the TBT, which is the inverse of TLT. TLT is an ETF that represents 20 plus year bonds. So 20 to 30 year bonds and the prices of those bonds. So here's your weekly chart. Let's go to the daily. It's more pronounced. Here's your extended move. We're short here. Okay, thought we had it on this down move, but now we made another up move. But I'm staying with the trade because I believe that this is topped out. Maybe there's another day or so. Maybe there's another point in here, but I'm not going to sweat a point because I think we're going to have a nice sell-off. I think we can have a nice sell-off down to the 107 area. In not the distant future, okay? or in the not so distant future, pardon me. So that's my take on the bond market, and I'm going to stay with that trade because all my analysis tells me we're on the right side of this one. So until something really crazy happens where it changes my analysis and my view on the market, I'll let you know. But until that, staying with that trade. The last one we'll look at tonight is USO, which represents the oil market. Same story. Bullish market, geopolitical events all over the place. We know about those. So if there was a super spike in oil, I wouldn't even call this a super spike, but somewhat of a daily chart spike in the price of oil, crude oil, you're looking at maybe 110, 112. That's going to translate, and I'm going to show you on the weekly chart, it's going to translate to about $40 on the USO. Now, why is $40 important? Well, you have a top. You have another area here where you had a lot of buyers come in this consolidation, and then they got the rug pulled out, and they took a beating all the way down here to $30, okay, from 40 just about, or about $40, 39 and a half. They took a shellacking. What happens is, as the market moves back up into this area, see, there were a lot of buyers in here. They thought they had it, and then the market rolled over and took these guys out behind the woodshed. So you have two scenarios where there's a lot of resistance in here. 1, 2. So as we come up into here, there's going to be a lot of sellers that want their money back. That's the way the market works. It works on emotion. The market is made up of people. People trade on emotion, most of them anyway. 99% of people participating in the market, whether they're hedge fund managers, mutual fund managers, financial advisors, anything you want to say, most of the people trade on emotion, invest on emotion, and they can't do it systematically. And that's why you'll see a lot of sellers up in this area, and that's why there's a lot of resistance in this area. So right now there's a no trade in oil. I think it does move higher, but there will be a time to short oil. It's just not now. So it's a no trade. We wait for a good setup, and then I'll let you know when the good setup is there in order to take the trade. So right now we've got a few individual stock trades out there for our members. I might put out another one in short order for everybody, another free trade alert. I'm going to try and do one of those once a week and see what happens. So for now, thanks for tuning in to my strategic forecast, common sense technical analysis. That's a wrap.